Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Well, we're back from our Costa Rica trip, and we're in town for a few days before we head back out of the country. So it's kind of nonstop as of late for us, but it's fun nevertheless, and it's nice to be home and sleep in the same bed. Now, for today's episode, I have a question for all you guys. What happened? When I left Costa Rica, Tesla was on an uptrend, things were looking good, potential calmness in Ukraine and Russia, right? Everything seemed to be going okay. And then I land back in the States, I come home, and it's like everything got turned upside down. So that's what we're going to talk about today. We're going to talk about what's going on, when will this end, and how we should really look at all these different things that are happening, whether it's Russia and Ukraine, whether it's any delays or anything going on with Tesla and things in the markets when it comes to commodities like nickel or lithium or anything like that. And then, of course, oil, right? We need to talk about oil and what that means in the bigger picture when it comes to everything, and mainly the stock market, and more importantly, with Tesla itself. So that's what we're going to talk about today in this episode, just to get a better understanding of what's happening with the markets, what's happening with Tesla stock. And again, I will reiterate some of my thoughts, my opinions, and where I see things going. Okay, again, none of this financial advice, just my opinion, just an engineer giving you my 2 cents, no pun intended there. But with that said, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. All right, let's start off with some good news. So as many of you probably know, this got announced a couple days ago. So Giga Berlin is set to not only open, but they're calling a delivery day for March 22nd, 22 at 3 p.m. local time. So this is very exciting. All right, this means that Giga Berlin is officially going to be live. It's officially going to be delivering vehicles. And this is just a very exciting time. We've been waiting a long time for this, and it's finally happening. And I do not think the markets have accounted for this. And we'll talk more about the stock market and Tesla stock price in a second here. But let's just take a moment to appreciate this. Again, many of you probably have already appreciated this with all the other YouTubers out there, but it's my first time getting a chance to talk about it with you guys, so it would be silly for me not to bring it up, especially since we waited so long for this day to happen. So even if you already heard about it, still want to shout out, still want to call it out, and just remind you about the good news that did come. All right, so putting Giga Berlin to the side, let's get into some heavier topics. Let's start off with patterns that we see in the stock market. Now, Tesla started to sell off around the time Elon Musk went ahead and put out the poll about him selling shares. So let's talk about all these things that happened. So Elon Musk said he was going to sell his shares. All right, there's a lot of stress about this. There's a lot of animosity about this. But nevertheless, he went ahead and sold shares so that he could exercise options, pay the tax bill, and lo and behold, Elon ended up with even more shares of Tesla than what he started. Now, all of this kind of sent everybody into a panic and a freak out, and the stock reacted to that. Well, as Elon started to sell, and we started to get an idea of when he would finish, which we knew would be by the end of December, well, the stock kind of climbed back and it kind of recovered, right? And a lot of that was because it started to happen. We knew what was going to happen. We understood the process. Okay, so that was the first thing that started to happen to bring the stock down. So we were able to weather the storm on that one. And then we got into the New Year's, and we got an amazing delivery numbers for Q4 and obviously for the full year of 2021. And then we got hit with inflation, CPI, Fed, all of that stuff going on. Okay, so once we got hit with that, again, the whole stock market started to freak out. The stock market realized, okay, inflation's real. The Fed says it's not transitory. What are we going to do? We're freaking out. Interest rates are going to go up. We're going to get all these rate hikes nonstop. And everybody started to panic about this. And so, of course, the whole stock market started to plunge. And Tesla, more notably, started to really head downwards, right? And we didn't like that. And then the Fed came out and had their meeting around mid-January. And after that meeting, honestly, it seemed like the worst of it was over, right? Tesla started to recover a little bit because we got some insight into everything. And then it started to go down again because there's more fears, because more inflation data came out, and just, right, everything just kept repeating itself. And so at this point, we all anticipate all these rate hikes. Nobody doubts that there's going to be a 25 basis point rate hike come March or next week, really. Okay, we all anticipate that. We anticipate many rate hikes to come. And Tesla stock is still sitting at anywhere between 830 and 860. Okay, that's where it's fluctuating. Now, I know it's not the $1,200 that we were at, but considering what we've gone through, it's not too bad. Now, there's been even more stuff to happen, okay? So let's recap. We've talked about Elon selling. We've talked about the Fed interest rate hikes. We've talked about inflation, okay? Now, what about the other black swan event that's happened, right? So far, we've talked about essentially three, with rate hikes, with inflation, and with Elon selling. Well, then we had Russia invading Ukraine. And if you remember, before Russia actually invaded Ukraine, it was nonstop stress. The market was up and down, didn't know what to do. It was literally like a red day after red day after red day. And then the day Russia actually invaded Ukraine, which was a very bad day in general, right? It is bad for humanity, it's bad for the world, it's bad for peace. But ironically, the stock market reacted in a positive way. It went green. And I think the bigger reason for that, once again, was there was no more uncertainty. We finally knew it was going to happen, and it happened. The same way with Elon selling. The same way with Jerome Powell and the rate hikes. Once we know what's going to happen, the market appreciates it, and the market reacts positively. So we had that event happen, and it's still going on to this day, unfortunately. Okay, this morning there's supposed to be more peace talks, and it seems like that got nowhere. Russia seems to really be hurting right now. It seems like they're not going anywhere anytime soon, but at the same time, they're not making any progress. So, I feel like at the moment, it's a lose-lose for Putin, no matter what he does, but he's got an ego, and he's not going to walk out of there with a loss. So, you're going to have to kind of table that. And frankly, as time goes on, I think that's going to become more of a background story, especially as other news comes up, other things that are more clickbaity and the press cares more about. But until that happens, that's what we're going to focus on, right? If you haven't noticed, this whole pandemic thing has kind of disappeared while the whole Ukraine and Russia thing is going on. Not to say that that doesn't need coverage, but it's just funny how the second the media has a new story to focus on, that's what they focus on. They ignore everything else. All right, so we handled that. Yet another black swan event, Russia invading Ukraine and all that drama. And that's led to sanctions. And we've been dealing with all the sanctions. And the most recent black swan event, I guess you could call it, that we've had to deal with was the ban of Russian oil into the States. Now, you may not think it's that big of a deal, and you may think that you can just get any kind of fuel or oil from anywhere, whether it's from South America or Iran, or if we could do it domestically. But you got to keep in mind, we cannot produce all of our own oil. We can't. You need different types of oil. You need some sweet oil. You need different types in order to create fuel, and the different types of oil we have to produce, right? There's just many different types, and you need all types of oil to do this. It's not something you can just all do from one country. And so that's why we have to import oil from Saudi Arabia, why we have to get some oil from other regions, even if we're not too happy with those countries, right? There's a lot that goes into it. And so banning the oil from Russia during an extremely inflationary period where there's already not enough oil out in the market, well, that has a big effect. And of course, the stock market started to react to it. At first, it started to react by being all over the place, right? It started going down, down, down. And then Biden finally announced, after it was leaked, that their administration would ban all oil from Russia. Once that happened, guess what? We had a very green day yesterday. Oh, man, ironic, right? You see this pattern happen over and over. Now, why is this? And I want to take it back to a friend of mine who's actually texting me yesterday asking if I was worried about the price of nickel and other minerals used for batteries when it comes to Tesla. And frankly, I told him, no, I'm not worried at all about it for Tesla. I'd be very worried about it for any other EV company, any other OEM company, anyone else trying to go into EVs. Well, why am I not worried about it with Tesla? Well, to understand how all of these things are priced, you have to understand that it's not today's price that these things are valued at. Okay, what do I mean by that? There's a reason why it's priced based on future value. Okay, because today's value has already been sold, right? Anything that was for today has already been bought, or there's already contracts for it. So the price you see today is really for the future value of it, not for today's value. And so what does that mean? Well, Tesla has already amassed all these contracts with all these nickel suppliers, lithium suppliers, all these battery manufacturers. They've already sealed, signed, delivered all their contracts. So they have all of these resources ready to go, right? Think of it as the Sam's Club effect, where they went and they bought in mass quantities to get the best price back then, okay, at prices from 2020, from 2021. Now today, Tesla's going to get the benefit from that. Now, what Tesla also gets to do is they get to see how our commodities changing today, and we can raise the prices now immediately with our vehicles so that we can front run any higher prices in the future. This is the power of Tesla. This is the power of them being able to control their pricing. Now, they also have crazy margins. Okay, so if Tesla is going to get even better margins with Berlin or Austin, they could potentially offset that and say, hey, we'll stick with 30% margins. We'll eat any extra margin that we would have. We won't recognize that until things settle back down. Tesla has a lot of levers they can pull. Now, these other OEMs, these other EV startups, they don't have that. All right, so all of these high price minerals is going to affect them. All the high price nickel, it's going to affect them. Lithium, it's going to affect them. So let's go full circle now. Let's go back to the beginning of my point here. So just like all these commodities, just like oil gets priced for the future, the stock market reacts in the same way. So whenever they announce rate hikes, the stock market goes ahead and acts on that today. So all these rate hikes that we've anticipated that are going to happen, the stock market won't react then. It's already reacted. It's already priced that in. Okay, what happened with Russian oil and the banning of it, the stock market already factored that in days before it actually happened. The whole war with Russia and Ukraine, the stock market already factored that in beforehand. Okay, the stock market is very efficient in this way. Now, I wouldn't say it's efficient on a day-to-day basis or a minute-to-minute basis, but over the long term, the stock market is extremely efficient at factoring in prices immediately rather than looking at it in the future. Okay, so whenever the future events happen, the stock market's already accounted for. It's already baked in. And I think that's what we keep seeing over and over. So what does that mean for Tesla? Well, it means a lot of good things for Tesla. First of all, it shows you how strong Tesla is as a stock. Yes, we're down, 30% from all-time highs? But everybody's down. Everybody's down massively. Tesla's actually down less than a lot of the other companies. Right? Most of the startup EVs are down over 50%. All right, some are close to 100% they're down. Tesla's only down 30%. Tesla's also only down 30% with 2 factories about to come online. And we know Berlin, which was the biggest headache, the biggest kind of hangover that Tesla had, is set to open in a week and a half. All right, March 22nd. Deliveries will happen on March 22nd. They're actually sending out invites. All right, this is a big deal. Austin is not going to have the same headaches that Berlin had. Austin is going to be even more eminent than Berlin. Keep in mind, Austin got started a lot later than Berlin. So, don't be too upset if it doesn't get opened yet. But I think we'll see deliveries before the end of the quarter. This is the last month of the quarter, by the way. And on that same note, for all those people out there who kept saying, oh, Tesla only had a good Q4 last year because China was expiring all of their EV tax credits. And so people were buying vehicles ahead of time because of that. And that's the only reason Tesla had so many sales. Well, let me ask you this. If that were true, why in Q1, arguably the slowest quarter that Tesla always has is Q1, why is it set and on pace, it's tracking to beat Q4 of 2021? Think about that. And that's before they've brought on the 2 new factories. Tesla's in a very strong position. Their stock price is holding up very well. Again, it's been battle tested. We had Elon selling. We had Fed rate hikes, and there's going to be even more Fed rate hikes that we've already factored in. We have inflation. We have the war with Ukraine and Russia. We have the oil embargo. Right? We have all this stuff going on, and Tesla is still holding up strong. So with that said, what do I predict to happen moving forward? I said this over and over. And again, I'm putting myself out there because I hate short-term predictions. I hate timing the market. But I really think that after we get done with the meeting next week with the Fed, once they announce their rate hikes and we know what the path is going to look like, I think the stock is going to really start to rebound. I think come April 1st, we can start to see the positive movement of Tesla going forward. And we have some other good stuff happening too, right? So we'll get done with the Fed meeting. Then we'll have the Berlin event where they start delivering vehicles. And then we'll finish off March, where we'll not only get the delivery numbers for March with China, but we'll also get the full quarter delivery numbers, which should be massive based on all of the indications from all these analysts who are going out and looking at their own supply chains. So that's a big deal. Then we have quarterly earnings. Then before that, we probably have Austin opening up. And again, Zach will be the one running the call. I do not believe Elon will be on the call again. And I think that's extremely bullish for the stock. Why? Because Zach will control the narrative. Zach will say what Wall Street wants to hear. And as much as we all love Elon and we all want Elon on, Wall Street doesn't. Wall Street wants Zach on. Wall Street wants to hear Zach say what they need to say and give them confidence that Tesla has not lost focus on what matters, what generates revenue for them, which is the vehicle sales. So I think that's what's going to happen moving forward. I think the fact that we're still in the 830 to 860 range with all of this going on, all this uncertainty, I think it's extremely, it's validating for the stock value is what it is, okay? It's very validating. I mean, the fact that it's been beaten up so much and we're still holding up at these levels, I think it's amazing. So moving forward, any good news, I mean, just think about it. Imagine a ceasefire with Russia, Ukraine. Imagine come March or April, whenever we start to get new CPI data, we start to see inflation start to slow down. Just slow down a little bit. Imagine we start to get deliveries from Austin and Berlin, right? Imagine, like, there's just so much negativity out there, but imagine some good news start to come up. That's going to be a big deal. That's going to be a very big deal, and I think we're going to see the stock market react to it. The stock market is thirsting for some good news. The stock market wants a reason to rally. You see it. You see it every few days. It's thirsty. It's craving. Big money is sitting on the sidelines. They're ready to put the money to work, but they're not until they feel that they can. And I think the Fed rate hike is going to be the first part of that. And moving forward into the rest of the year, I think we'll start to see some bullish things happen. Now, there are always risks that could come up. All right, we might get into another dispute and sanctions and whatnot with China because they're buying Russian oil or things of that nature, right? We can't predict those things. All we can do is predict the things that we know. And what we know is the Fed will raise rates. We know Austin will open. We know Berlin's going to open. We know when Tesla's going to have their earnings, right? These are things that we can know and we can plan for. You can't plan for the things that you don't know about. You can't plan for every scenario that may go awry. But you know what you can plan for? 5 or 10 years out. And that's why we hold for the long term. That's why long-term investing is the best strategy, because all of this noise over the long term, over 5 years, 10 years, 15, 20 years, it becomes a distant memory. However, your portfolio becomes even stronger and battle-tested, and hopefully it's up and to the right. Okay, we're going to leave it there for today. Again, I'm back from Costa Rica for a few days before we head out of the country again. Very excited today. My best friend from college, he's in town. He's a Black Hawk pilot, or former Black Hawk pilot now. Him and his wife are in town, so we're going to go out, have dinner with them. Very excited about that. I haven't seen him, maybe about 4 years, so a lot of catching up to do. But again, with that said, do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.